Oh, yeah, absolutely. Let's bring in our market master today, Taher Badshah, CIO at Invesco Mutual Fund. Taher, good morning. Good to have you with us here. Thank you very much for your time. So on Telecom, what's the view now, Taher? This is the first of many hikes, and you've got to wait again against, the news flow and the story, etc., against what you're paying for these stocks now. So how does that look?
Yeah, so I think, this has obviously come after a very long period of time. But at the same time, as you know, this was also in the works and it was built into the market expectations over the last some time. And some of the performance of the sector in the last some time has been reflective of that as well. But the good part is that, when we tie this up with the fact that, there is not really much in terms of now money being spent on spectrum, and that probably, gives the chance for some of these companies to incrementally improve their balance sheets as well going forward. So I think it's a good situation from a longer term perspective. Part of it is priced in, but I think over a period of time we can probably see profitability improve. These are at some level very high fixed cost businesses, so obviously a lot of it translates into the bottom line, and valuations are not necessarily very demanding. So I think we will probably see some more legs as far as the sector is concerned.
Okay, Taher, hi, good morning, and thanks for joining in. Overall, for the market, how are you feeling now? I mean, is there any reason to be concerned at all? Because, it's record highs every other day, and at some point, a correction's got to kick in, right? Do you think there are reasons to believe that a correction is coming, or is it just steady state for the market?
So yeah, when you don't see any reasons, and that is a time when you worry the most, as you know. So our job is to worry, both in a bear market as well as in a bull market, and probably now more so in a raging bull market. But I think there are a few things that we have to watch for. I don't know whether they will become worry issues or worry matters. But clearly everything from the budget and its positioning and what it means in terms of whether the budget will be able to kind of broaden the economy, or will it probably mean higher costs, higher fiscal. Those are the things which need to be watched from the budget. We obviously have to contend with the outcome of the monsoons. It's important this year. Forecasts are good, but we have to see the reality. We then contend with some of the other issues like US elections. It matters from a global standpoint. And then, of course, there is a whole discussion about interest rates and inflation, which we have not seen an end to as such, and that will also be debated. So I think there are things which are there on the windscreen, and we have to kind of not necessarily worry, but probably prepare from a portfolio standpoint or from a risk mitigation standpoint. So I think that's what we'll have to kind of keep doing over the next 6 months, as you know.
Okay. Just two more names. It's a vibrant screen, Taher. So single stocks, you'd agree, right? So much happening. I'm not sure if there's any news flow or buzz around 361, but 10% higher on that wealth management company of the stock. 1,020 now on 361. Moripun Laboratories is up. If you can have these stocks up, please. Yeah, there you go. GE Shipping is up 4.5%. Moripun Laboratories is up 9%. Now, these are newer names which are coming through. And Steel Authority is up 3% with humongous volumes, very large volumes for this point in the day. So keep an eye out on that as well. Newer and newer stocks coming through into the mix. Taher, heard on the wealth management side, lots of initiations, right, lately. 361 was one of those companies which saw lots of brokers initiating, etc. on. I think appetite is widening. Or maybe people are, because they're so hungry for ideas outside of the top 100 names. Do you sense that? Are you guys also sort of going down the curve or no? Are you climbing back up?
Well, I would say I'm trying to consolidate. I don't really want to kind of go down the curve as much. And some of the moves that we are seeing are obviously baffling, especially in short periods of time when we are seeing those kind of rallies. Some of these stocks, however, are in our ownership for some time. So, okay, we are to some extent even enjoying the fruits. But obviously, it makes life a little more difficult, because the thing is that, we've anticipated something which will happen over a 18-month period, and happens within less than 3 months. That's something which calls for action once again. So, those kind of challenges, I think some of these merited, but not all of it in such a short period of time. So we try to. So like I was trying to indicate that this is a year in which you have to probably be a lot more watchful of risk. You are getting a lot of return, but you have to be a lot more cautious in terms of your risk management. Maybe last year you didn't have to do as much, but you have to think a lot more in terms of risk rather than return in 2024, or at least for the second half of 2024.
Yeah, no. As someone jokingly said, but I think it's also true. The worst thing about what is worse than not buying something which went up is to sell something and then watch it go up another 50% or whatever.
Unless you rotated that money into something else, which has also made you money.
Which is also done.
But otherwise, that's painful.
No, but have you had some of those? I mean, if you
quite a number of them, yeah. I mean, not as many in 2024. We had a fair bit of them during the COVID period for sure.
Okay. Taher, I know you don't comment on individual stocks, but I just want to ask you how one should approach a situation like this, right? I'm talking about a name like Polycab. So Polycab, as we speak, is down about 3% It's come off a bit from the high. Great business, very strong promoters, good moat, etc. But now promoters are looking to sell a bit of their stake. So 2% stake is being sold by the promoters. What do you do at a time like this? Do you keep the faith, considering the business and the momentum is good, and just ignore the fact that promoters are cashing out a bit? I mean, in such a situation, what's the best way to approach it?
So, Sonia, it's obviously it's upon the merits of the individual case. And I think a couple of names that you mentioned along the way have been companies where we have probably seen them grow very aggressively. They have been of the what we call the challenger variety, who are basically trying to close the gap with the leader in the respective industries, and that's something which has excited us as a proposition. So I think that is where some of the action in some of these names that are showing that kind of a color, that can they grow ahead of the market, can they grow ahead of their own industry and well ahead of the system rate of growth. And I think there have been a number of cases, even in industries which haven't had a lot of tailwind, we've seen those who have executed well and delivered well have been significantly re-rated. And I think that's what is going on in a few of these.
Okay, significant re-rating in many of these. Got it. The other space I wanted to ask you about, I know we've spoken about banks ad nauseum, but is this a time to be taking a fresh bet on many of these private sector banking names? I mean, there's large delivery-based buying happening in names like ICICI Bank, HDFC Bank, Kotak Mahindra Bank. What is happening here, and why have investors suddenly become so bullish?
I think, one by one, the market is broadening, and there is obviously a hunt for ideas and pockets of the market which have not. See, I think there's a peculiar situation where while we know that the market has done well at an aggregate level, that there are some pockets of the market which have not done as well too. And even in our scheme of things, we have looked at some of those areas which have turned relative value, if not absolute value, and try to balance our portfolios accordingly. So I think banks feature in that segment. Maybe tech also, I would say, to some extent, should be a sector which may have those kind of characteristics. We've seen a fair bit of disappointment or lackluster approach as far as that sector is concerned. I think if the discussion around the US economy has now decisively changed from recession to what kind of growth, I think tech sector should not probably be very far behind. So same in the case of banking as well. Credit growth, etc., has held up well. There is a certain amount of still a little bit of difference as far as the nature of the credit growth is concerned, driven more by personal, unsecured, etc. So that's somewhat coming in the way. But by and large, this is a place where valuations are not exactly a challenge. So I think that's something which can excite the market, especially when many other pockets of the market are drying out in terms of relative value.
Okay, any other pockets where you think valuations are exciting? I mean, one space that I can think of is IT, which has been, a big underperformer lately. Do you think money will start moving to IT as well? That's the only pocket that hasn't done as well as some of its larger cap peers. Any thoughts there?
Absolutely. I mean, I just, like as I mentioned a while back, that, this is a sector which I think should kind of see some color. I think much of 2023 we saw business conditions not being as bad, deal wins, etc. If that is an indicator, has held up well. But by and large, the commentaries has been that let's hold back on the execution because ground level reality for the US economy in general was not as great. But I think that we moved away from that discussion. 2024 onwards, there's probably the recession word has not just come by. So I think, and in fact, it is moving decisively towards how strong can the growth be. And it's therefore not surprising that interest rate cuts have not come through, despite all the expectations in the market. So I think it is probably a quarter away when, commentaries for tech companies get better from a execution or a ramp up standpoint. And I think if what is more like a 3 to 5% growth turns out to be a 7 to 8% growth, I think that should be enough to, drive a fair bit of rally in this sector.
Okay, one last question before we let you go, because it is, the impending event to watch out for, which is the union budget. It's going to be the first, full-blown budget post the government coming into power for the third term. So they may have a lot of, sort of aces up their sleeve, whether it's in manufacturing, whether it's in defense, and a whole host of affordable housing. Which are the spaces that you're going to focus on, where you think that some kind of impetus or incentive could be given in this budget?
Well, obviously, I mean, the ignored pocket of the market is low-end sections of the pyramid, which have actually not done as well. Many estimates seem to suggest that disposable income in the lower to mid parts of the income pyramid are lower than what they used to be pre-COVID. And that's something which is quite alarming at one level. And therefore, it's not surprising to see the kind of dichotomy of trends in growth that we've seen in different parts of the consumption basket. So I think that will be the obvious pocket to address, especially from a political standpoint as well as an ongoing political standpoint. And it may not necessarily be a bad thing. It will broaden the economy, I would like to think, and it will also mean some more balancing as far as market valuations are concerned from one part of the market to the other. So clearly, a value consumption, maybe some parts of FMCG, some lower end, pockets, rural-oriented stories. That's a part which market is starting to feel excited about, and that excitement will probably continue to, develop further in the run-up to the budget or after the budget.
Okay, all right. We will let you go on that note. Thank you so much for joining us, Taher. Appreciate your time here on CNBC TV 18. Well, moving on, the market is, by the way,